Everyone, this is Sandra with Trading Made Simple, and today we are going to discuss day trading straddles and strangles. I'm going to go through what they are, how to determine risk and reward, and we're going to actually demonstrate the straddle and strangle options while trading. So, this is going to be a great episode. And by the way, for fun, this is a chimpanzee, and the chimpanzee is taking a nice, innocent ride on the other chimpanzee. I did a double take when looking for some photos for my presentation, and I laughed and just had to include it so you could get a chuckle too. That was the entertainment. Okay, so a straddle and strangle, they're option strategies investors use to benefit from significant moves in a stock price, regardless of the direction. So we don't care if it goes up or down, we just want it to move. And straddles, in specifically, are useful when it's unclear what direction, you don't have a bias of the direction of the stock price. And so the investor's protected regardless. Strangles are useful if you do have a bias, if the stock's going to either go up or down. You could give yourself a slight benefit by getting a strangle and still have the downside protection if you were wrong in your assumption. So, okay, we're not going to talk about taxes. You know, I'm not a tax expert, and this is for entertainment purposes only. I'm also not a financial expert. So let's get to the long straddle. This is how the profit and loss graph looks like. On this straddle, your risk is your time decay, which is right in here. And these are your break-even points as you move up. Now, your total risk is if it expires, right? Then you lose the entire price you paid for the long straddle. But that's not what our strategy is. We're not going to just let it expire. We're going to close it out when we have a profit, and or we've determined our loss, and we're going to close it out as well. So this is what a long straddle looks like. Now, on your computer on TOS, when you bring up the profit and loss graph, this is what it looks like. So this is the real deal here. Now, when you're not trading, you don't see any bumpers right here like these bumpers. You don't see anything right here because you get, you're getting some time. As time starts passing by, that's when you start to see some red bumpers over here if the stock price stays right in the middle. So again, if the stock is going to hover around the strike price that you get it at, this is not good because you're just going to lose time, and time is decaying in your profit. Okay, so you profit it going this way as well as this way. Now, a strangle is two strike prices. So as an example, a 610 and a 605. And you're believing that the stock price is either going to go up or down. If we got a 610 and a 605, then we believe, or excuse me, the other way around, 605, 610, then you believe that the stock price is going to go higher. Now, if you were wrong in your assumption, and it starts to, and you're starting in the middle, and it starts to go lower, at a certain point of loss, it's then going to reverse after that $5 wide spread. It's going to reverse and you're going to start to profit. So this is an interesting strategy, right? I mean, it really is kind of a really cool strategy if you believe you know the direction it's going, but then you've made the wrong decision. You could still recover, okay? But if it stays in the middle here between the two strike prices, you're not making any money, and time decay again is going to work against you. And on TOS, this is exactly what that looks like. Now, even when you're not trading, you're just looking at the analysis graph because you're not analyzing the trade. On the strangle, you will see the two bumpers immediately there, and that's your loss and your risk. And so remember that the total loss and risk is the amount that you paid for the strangle at expiration. And of course, you profit if it goes this way as well as this way. All right, so please, if you're enjoying the content, subscribe, give me a thumbs up or down, leave me some comments. Let's trade this and see what happens. We are going to demonstrate this now. We're going to trade it, and I'm going to show you how to do that on a holiday Monday at 10:30 in the morning. So if you're in your real account, you could go right over here to on demand, and this is a cool feature. If you've never used it, you're going to become addicted because it's basically the stock market game. It's price data from, a year. You could pick any date you want, and you get to use all the functions of toss while you're basically looking at the data from a previous day of trading. So we're going to go ahead and demonstrate this. There is the 28th, May 28th, so we're going to do Friday's day, and we're going to get set up. We're going to use 6:30 in the morning on Pacific Standard Time. And so now that loaded up. We're in a pause, so I'm going to get my trades ready. And typically, once you get your trade grid up, it's going to be like this. Of course, the cheaper options are going to be on the same day expire. So I have NVIDIA up. So let's try a strangle. We have a bias that NVIDIA is going up, and so we are going to get a strangle. The price is $6.19. So we're going to just use the drop-down menu and go to strangle. And it already highlighted for us the 620, 622.5. So because we believe it's going to go up, we're on the call side. We're going to buy one. It says that it's going to be between these prices. We're going to hit market because we want to ride this right when the stock market opens. And so I'm going to do market and confirm and get that ready. And then now we're going to do Tesla. And we are in the grid, 0 expire. It is 6:30.85. So on this, we're going to do a straddle. And we go down to 6:30. This one's not highlighted. So on this, on the straddle, it doesn't matter if you buy the call straddle or the put straddle, they're exactly the same. So we're going to go ahead and do a market order for this because we want to start out the day with this day trade. Okay, so we're ready to rock and roll. I'm going to go to my monitor tab. I'm going to detach it and I'm going to pin it. And if you've never done this before, you're going to enjoy it. You could take this window with you while you're doing some day trading so you don't have to go back and forth on your tabs. So let's just get that in position. And by the way, make sure you pin it. Just FYI, if you don't, then believe me, as soon as you touch your monitor or your tabs, this is going to be behind the screen, and it's going to drive you nuts while you're in the middle of a trade, and it's terrible. So because we're doing a day trade with 2 stocks, let's see if I can get another stock up here. I can, but my thing looks a little different, and that's okay. We just want to see the candles. Okay, so we got Tesla, we got NVIDIA, we got our orders ready, they're working. Let's press play and see what happens. So we're waiting to get filled. This is just like real life. You don't get filled when you want to, so we're going to just speed this up. Your controls, just like a recorder, are right up here. So I'm going to speed that up so we can get filled. Oh, goody. All right. So, okay, we've been filled. So we have our Tesla and Nvidia up. Let's take a look. How are we doing? Wow, we're down on Tesla already. Um, so I would already be considered, by the way, I would already have my uh, stop loss, at least a stop loss ready. Do I want to be down 130 or 105? I really don't. But I'd rather take a paper cut and then take a deeper cut. That's my thought process. So let's go ahead and let's move this 5 minutes and see how we're doing. Remember the Nvidia we thought was going to go up, so we took a strangle on that. Tesla we didn't know, so we just took a straddle on that. And look at that. Okay, so Nvidia's doing good. It's 297. Tesla's still hanging around. It's kind of its stock price here, so it's not really doing much. We need it to really move either one way or the other. So let's go ahead and move this now an hour. Let's just move this to an hour. And it didn't do it, so let me pause it. Maybe that's what I needed. And by the way, the tools on demand are a little slow. You will have to have some patience, especially if you're actively using all the buttons. So now we're moving this up about an hour and 15 minutes from the start. Oh, nice. So, okay. So Nvidia now is at 1428, and of course Tesla's at 304. Again, I would have cut that a while ago, but this is a great demonstration to see how to utilize these option strategies for day trading stocks that can move one way or another pretty good. And so these are some growth stocks that do move like that, somewhat high priced, so it allows you to access those. Okay, so now let's say that it's close to the end of day. For me, that would be 1 o'clock. So we're 15 minutes before close. How are we doing? And by the way, you don't have to fast forward when you're using on demand. You can just, just go through the candles the way you want to. So that's kind of cool that you're able to do that. Okay, so we're almost at the end of day, and here are our results. Nvidia did a great job. It went up 30 bucks, and our profit is $2,152. Tesla, it moved $2.68. We're down $9.79. So when we take a look at our profit and loss graphs, let's do that. We can see that on Nvidia, we're all the way over here. And if you look right here, you can see your profit and what your profit or loss would be at the close of escrow. So that's where we are right there. And then if we take a look at Tesla, so Tesla, look, he's still around the stock price. The bumpers are getting wider ever so slightly. And we're just time decaying right in the middle here because we haven't really moved one way or the other. So because all of that time decay, that's how that works. And that would work the same way on the strangle as well. So just keep that in mind. So as time is passing and you're just staying around the stock price, you're not really benefiting from this option strategy. So we're going to go back to the charts. And by the way, if you don't already know this, when you're in this, when you have this pinned gadget, you can close out. Look at that, lost $1,000 there. You can see I'm just as angry as I would be if this were real. So we're going to close that out. And we're going to go to Nvidia. And we're going to close out the strangle. Okay, now when we go back to our field orders, I'm going to go ahead and pause this. When we go back to our field orders and we organize by symbols, a little slow. Is that because I don't have the player on? Okay, let's see if that works. Indeed. There we go. So when we bought Tesla, we bought it for $1,268, which is $1,268 for one contract. And because we didn't close it out and we just let it ride the day, we were only able to sell it for $250. So you could see that's where our approximately $1,000 loss was. And on the flip side, when we bought NVIDIA for $633, we then got to sell that for $27.75, and it did awesome. So we were able to get the profit out of there. So all in all, that is a straddle, that is a strangle. And if this was valuable to you, please let me know how I'm doing. Give me a thumbs up, share the video, and we will see you at the next episode. Happy trading, guys.